Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Tuesday, February 3rd, New York Open Prep. Here are the key themes shaping the session. A sharp rebound in gold after last week's wipeout. Oil supported by shifting trade flows and a technical turn higher. And a firmer US dollar backdrop as European bond yields climb. Starting with the global picture, precious metals are stabilizing. After a historic sell-off, gold and silver are bouncing, with several desks calling last week's slide a positioning reset rather than a change in fundamentals. Some outlets even flag this as the strongest rally day in years, while others note the froth may have come off, letting gold resume its role as a barometer of political risk. And in the broader risk complex, last week's jolt from a major tech heavyweight sparked a ripple across popular trades, but today we're seeing selective resilience, with Palantir's upbeat guidance standing out in a softer software tape. Ray Dalio's warning about a potential capital war underscores why cross-border flows and hedges remain front of mind. Energy is in focus. Indian refiners are reassessing Russian crude purchases after a new U.S.-India trade arrangement that ties lower U.S. tariffs to New Delhi, shifting oil buys toward American barrels. That's supportive for U.S. crude demand. Meanwhile, West Texas Intermediate is turning up from just above the $60 area, with a bullish short-term moving average crossover, keeping the upside bias intact. In liquefied natural gas, Qatar is set to announce a long-term supply deal with Japan's JERA, a move to reclaim market share in Asia. On policy and rates, the dollar tone is constructive after a surprise jump in U.S. manufacturing data, and Federal Reserve official Thomas Barkin highlighted the economy's resilience while framing any rate cuts as labor market insurance in the last mile of disinflation. In Europe, German 30-year borrowing costs have risen to their highest since 2011, a backdrop that works against further European central bank cuts and can lend some support to the euro. The euro-pound cross sits near a 5-month low as UK spreads richen, and in Canada, the loonie is trading close to fair value by bank models. In the US, a partial government shutdown continues, adding a layer of political noise, while Bank of America's global risk love gauge has pushed into euphoric territory, hinting at scope for consolidation. Turning to markets and sectors, the metals rebound is lifting miners and precious metal funds. Crude's technical turn and potential new buyers from India are mildly supportive for energy sentiment, and a stronger dollar leans against broad commodity strength, even as European yields cushion the euro. Looking ahead, it's a quiet calendar, so headlines and policy remarks may do more of the driving. Watch for any progress on the U.S. funding standoff, further central bank signals, and whether gold stabilization sticks. What you should be watching today. Keep an eye on gold against the U.S. dollar, looking for an uptrend to hold toward the 5,000 area if dip buying persists. Watch WTI crude for an uptrend as technicals improve and trade flows swing toward U.S. barrels. For currencies, monitor euro-dollar for a slight downtrend bias if U.S. data strength dominates, tempered by higher European yields. Dollar Canada looks range-bound, with a modest downside bias in the pair if oil extends gains. Euro sterling bears watching for further downside if UK spreads continue to firm. And after Australia's rate move, the Aussie against the US dollar could attempt an uptrend if markets lean into that policy shift. The takeaway: markets are resetting after a sentiment surge and a metals shakeout, with policy and politics likely to inject short bursts of volatility.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.